A digital coin surged by over 1,900% in a single year. Bitcoin captured the global imagination, transforming finance forever. The year 2017 began with this mysterious cryptocurrency trading around $900 per coin, a niche interest for tech enthusiasts and early adopters. But soon, a quiet ignition began fueling its rise. Throughout the spring and early summer, its price slowly climbed past $1,500, then $2,500, attracting nascent interest from a broader audience. By autumn, a full-blown speculative surge was underway as the price breached $5,000, $10,000, even $15,000 within weeks. Media outlets worldwide started covering its parabolic ascent, drawing in millions of new investors. Driven by the fear of missing out, many individuals poured life savings into this volatile asset, hoping to replicate the success stories of others. Exchanges struggled to keep up with the overwhelming demand, registering hundreds of thousands of new users daily. The total market capitalization of all cryptocurrencies, largely led by Bitcoin, expanded from mere tens of billions to nearly $800 billion. By December, a truly staggering eightfold increase in just 12 months. This hyped zenith saw mainstream adoption reach unprecedented levels, with even casual conversations at dinner tables revolving around Bitcoin's latest price movement. Everyone, from taxi drivers to financial executives, wanted a piece of the action. Many believed it was a new paradigm, a new era of decentralized finance. But critics warned of an unsustainable bubble, fueled purely by speculation rather than intrinsic value. This period was marked by incredible stories of overnight wealth generation, alongside the very real risks of significant losses. As new participants entered the market every day, convinced the price would only go higher, the volume of transactions exploded, from a daily average of around $100 million to several billions by year-end. It was a financial phenomenon that redefined the concept of rapid wealth creation and asset valuation for a generation, setting new precedents for digital assets and market volatility. A massive $19,783 dream shattered. Bitcoin's extraordinary valuation began its swift and brutal descent from January 2018, just weeks after reaching its astounding peak of $19,783 on December 17, 2017. The intoxicating euphoria of the boom quickly evaporated as prices plunged by over 50% in a single month. By the close of January, it traded below $10,000. This dramatic correction left millions of new retail investors who had poured their life savings into the market reeling. February brought further financial pain as another $5,000 vanished from its dwindling price tag, leaving it around $6,000. The total cryptocurrency market capitalization, which had swelled to $830 billion at its early January zenith, crumbled, losing over $600 billion within 11 months. By December 2018, Bitcoin found itself hovering around $3,200, representing a staggering 84% drop from its all-time high. Thousands of smaller altcoins and digital assets suffered more catastrophically, some losing 95% or more of their value, wiping out projects and aspirations. Global regulatory bodies and financial institutions, which had previously watched with skepticism, began issuing stark warnings about the inherent risks and lack of consumer protections within the unregulated market. Daily trading volumes, which had routinely soared into several billions of dollars during the peak of the speculative frenzy, plummeted to mere hundreds of millions dollars, a clear sign of drastically reduced market activity and widespread investor abandonment. The pervasive narrative in mainstream media shifted dramatically from a revolutionary new financial frontier to a clear speculative bubble that had definitively burst, leaving countless individuals facing profound financial setbacks and often ruin. Numerous cryptocurrency startups that had flourished and expanded rapidly during the preceding bull market struggled to maintain operations, faced severe layoffs, or completely ceased to exist. The number of active users on various trading platforms and wallets decreased substantially, reflecting a broad exodus of participants. The digital asset market consequently entered a prolonged and unforgiving period, widely dubbed the crypto winter, characterized by consistently low prices, stagnant growth, and a profound sense of disillusionment among previous enthusiasts and early adopters. This challenging period served as a stark and painful reminder of the extreme volatility inherent in such a novel and largely unregulated asset class, offering a powerful contrast to the unrestrained optimism and seemingly endless gains of the preceding 12-month period. It cemented the idea that while rapid wealth could be created, it could also be swiftly undone, emphasizing the speculative nature over any immediate intrinsic value. The lesson was brutal for many who had entered the market blindly, chasing dreams of instant riches without understanding fundamental market dynamics or risk management. Billions appeared from thin air, an unbelievable event. Bitcoin began an unbelievable journey that year, drawing in millions. This was the true 2017 ignition, a moment when a previously obscure digital currency suddenly captured global attention, as small gains turned into massive fortunes for early investors. The narrative shifted rapidly from niche tech curiosity to a revolutionary financial asset, offering unprecedented returns. Everyday people started hearing stories of overnight millionaires, fueling immense curiosity. Social media platforms buzzed with discussions about its potential, and trading volumes started to climb steadily, day after day, hitting new highs regularly. The speculative surge then took hold, driving the price further with each passing week. New investors rushed in, fearing they would miss out on the greatest financial opportunity of their lives. Market capitalization grew from tens of billions to hundreds of billions in mere months. By early 2017, the total crypto market was around $20 billion, and by year-end, it had soared past $600 billion, a 30-fold explosion. Initial coin offerings, or ICOs, boomed as well, raising billions of US dollars for new projects, some with little more than a white paper and a promise of future innovation. These altcoins piggybacked on Bitcoin's success, often seeing even more dramatic percentage gains, though from much lower bases. The media played a significant role, amplifying the excitement, with daily news reports charting its astonishing ascent. Many financial experts, who had previously dismissed it as a fad, started to express cautious optimism, while others remained staunchly critical. Despite warnings from established financial institutions about extreme volatility and potential bubbles, the momentum seemed unstoppable. Hype's zenith arrived in December 2017, when Bitcoin hit its astounding peak of $19,783. The collective euphoria was palpable, with mainstream news channels reporting on it constantly, and everyday conversations often turning to crypto. This was the moment of maximum greed and widespread public participation. Many individuals taking out loans or investing their life savings into what seemed like a guaranteed path to riches. Trading platforms struggled to keep up with the influx of new accounts and the sheer volume of transactions, often experiencing outages. The total cryptocurrency market capitalization briefly touched an incredible $830 billion in early January 2018, just after the Bitcoin peak. This period showcased an unprecedented global speculative fervor, where traditional financial metrics seemed to lose all meaning. It was an era defined by a collective belief in exponential growth, where every dip was seen as a buying opportunity, and every gain fueled further investment. The widespread adoption of mobile trading applications made access to this volatile market easier than ever before, allowing millions to participate directly in the frenetic activity. However, this extreme high was short-lived, and the subsequent dramatic descent from $19,783 to around $3,200 by December 2018 served as a brutal reminder of the inherent risks when speculation overrides fundamental value. The staggering 84% drop from its peak brought many back to reality, shattering dreams of instant wealth for countless new retail investors who learned a very painful lesson.